Good morning, everyone. Welcome to the modern market, where every day we're going to get into everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have Michael Saylor's strategy fund trying to buy more Bitcoin, but this time in a slightly different way. Legendary is going to break that down in just a little bit. We've got Coinbase launching verified pools, a permissioned way to seamlessly trade on chain. That's an interesting insight into how things might be moving forward in the future. Brett's going to be breaking that down. And we've got Yeet, a new crypto casino to spend all of your bear market gains or try to make back everything you lost. 7.75 million raised, led by Dragonfly. We've got the latest on price action on crypto and NFTs too. Got Legendary and Bread Guy with me, and we'll have Adam from Proof of Play, head of product, with us in just a little bit too. Can't wait to get into the conversation. But before we get there, just a reminder, friends, nothing that we say here is financial advice. This market is very, very risky. We don't know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Wednesday. It's the 19th of March. How are you doing?
And GM, I'm doing quite well, but I know what the people on YouTube are actually here for, and it is another episode of Brett's commercial segment, because the comments are asking or saying, just Stefano, Brett, really nice biking gang, stay strong. So I did see that as well. What's the story here?
Bros, that post got so much engagement. I had I just yeeted the thing out because I bought a bike, right? I mentioned that actually on this show, I don't know what, a month ago. But I've been traveling, whatever. I bought the fucking thing. Have not rode it. The dude who sold it to me, because I buy aftermarket. I'm not a new item buyer. I'm a secondary buyer. He gave me some clip shoes. Yeah, there it is. So I got this cool bike, like cool. I'm feeling confident, swaggy, whatever. I have a bike. It came with clip shoes, and the notorious thing of having these clip shoes is you're bound to the bike, right? And the joke is always like, you're gonna fall. Like everyone falls the first time, like literally just stationary in your yard, road, whatever. I tried to make a point to avoid that. I practiced. I sat there, I did the clip in, clip out, clip in, clip out. I fucking first ride in downtown, new home, like cool, everything's all sweet. Literally right next to some fucking construction workers. I stop at a light and do the slow-mo, just like because I couldn't fucking unclip my shoes. Because observing everything else. I panicked for a second. So I got a little boo-boo on my hand. And apparently it's just like everyone, there's a lot of sympathy. There's a lot of bike riders in Web3, apparently. A lot of sympathy. A lot of people respond to that like, bro, that's just the rite of passage. Like you have to do it. So yeah, I'm officially.
So what went wrong? Why couldn't you do it? Is it something technical? Did you?
No,
it's wrong? Did you set yourself up wrong?
I mean, they clip in harder than I expected them to clip in. And it's like, you have to do a special like heel out, like flick of your foot. That just like, it's not a trained feeling for me to do it. So like I stop and I'm trying to like literally lift my foot off and out like you would as a human in most normal interactions. And that's not the move. The move is a ankle flick to get out. A pressured ankle flick is actually harder than I thought. I didn't do that. It wasn't a trained feeling. And I ate shit because of it.
Speaking of bikes, Adam, product lead at Pirate Nation Proof of Play, with us today. I don't know if you caught much of that bike story, Adam, but you're taunting Brett there with the bikes in the background.
Yeah, those are not my bikes. I caught the story. I saw the drama that you saw.
Yeah.
Good job.
I lived through. You're same time zone as me, right? Yeah.
You're
West Coast.
I had it's 4 a.m. for me.
Bro, yeah.
In bed, I would have been awake at this time because I have kids, but I saw a note from Duchuk. He's like, "Oh, by the way, like we're starting in a minute." I was like, "Okay, cool." Like I'm like in bed and I'm awake. I thought I had 30 minutes to collect my thoughts, maybe take a shower, present myself appropriately, and
psych.
I'm 60 seconds from the bed.
Right this is how we ensure raw, unfiltered thoughts, Adam.
Yeah,
raw, unfiltered.
I may be spicier than normal today and say things that I wouldn't otherwise say because my filter hasn't turned on yet.
Nice.
Yeah. Yeah, the time zone is actually convenient here because we actually do this to everyone their first day. We just don't like we don't usually have the time zone to lean on them. We just like we surprise them
this
with an
is
hour.
hazing. This is
Yeah.
how you do it. Cool.
It's another rite of passage. Yeah.
Yeah.
All right, I have to like set up my camera and stuff. So give me one moment to just
Yep.
professionalize the show.
We're just going to get into the headlines and price action as usual to get people up to speed, and then we'll get into the discussion on everything in just a moment. So starting with the price action as usual, we have Bitcoin, which is flat, 83.4. We've got ETH up a couple of percent to 1.9K. We've got XRP up a couple of percent to 2.3. BNB is at 617. Solana is steady, 126. Everything seeming pretty steady at the moment. On the meme coin side of things, which has not been steady up until now, we have Doge also steady, 16 cents. Pepe up a few percent. Trump is flat. Bonk is flat. Whiff and Pengu pretty much still. Pengu's just down a couple of percent. SPX Murad's coin up 7. Fartcoin up 22%. Of all the coins, Fartcoin is definitely the most volatile of all of these. We report on it every single day. That seems to have the biggest upticks and drawdowns routinely. What else do we have? Popcat's up 4%. In general, on the week at least, a lot of these memes are green, even though they're still hyper volatile. But that is what is going on there. AIXBT, for example, down another few percent to under 10 cents. So kind of big implosion on the AI side. Getting into the main headlines themselves, we've got Michael Saylor's strategy funding more Bitcoin purchases with new preferred stock. That's going to be interesting. Legendary is going to break down how this raise is operating slightly differently to the other ones that have taken place before. Got Coinbase launching verified pools, a permissioned way to seamlessly trade on chain. And then we've got Yeet, a new crypto casino's announcement of 7.75 million raise by Dragonfly. And some of the details of what kind of games they will be pushing. Pretty interesting stuff to see tier 1 crypto VC backing a casino. Hadn't seen that before. Legendary, that's the main headlines. Anything going on the NFT side we should be aware of?
Yeah, the majors are pretty quiet. The only thing that has moved a bit are actually the pudgies. They're up 3% and now well above the 9 ETH floor again, sitting at 9.27 ETH. However, the other collection that I did want to check in are the Masks of Lucy. Obviously, they did move up a lot, and we talked about that on the show. From the mint price, they moved from 2.5 to almost an 8.8 ETH floor, but they did correct down a bit, down 7% over the last 24 hours, and now sitting at a 6.4 ETH floor currently.
Like it.
You know, I hadn't checked on the Kaido Genesis in a while. We're still at a 2.15, a little lower than my last check, but
yeah, 2.15 is the current price, down 2% over the last 24 hours, but still up 20% over the last week.
Still holding bread?
What a silly question, B-check. unless I'm selling it on this show, yes, it's in my wallet. Like that's the only time I think to do that shit. So you can comfortably assume if I have not announced it here publicly on the show because I did it live on the show, I have forgotten about it and it is in my wallet. Probably worth 0.
I did not make a bunch of friends when I was kind of hinting at people when they were running up to 12. I was like, maybe you shouldn't buy this thing.
I had 2 in my defense. My first time I had 2 and I sold 1. So I was able to do that before the reveal. You know, the typical sell before reveal play on NFTs. That's how you work it. I'd made the play on 1, but yeah, still locked in on the other.
Good. That probably took place during the show as well. So the show not just being good for some updates, also like key decision-making moments.
So we can get you to buy stuff on the show. Is that kind of how this works?
No, only sell.
Yeah, only sell. That's my problem.
Okay.
Yeah, I acquire on my own, ambitions. I'm really bad at selling. So like I often say I need to sell and then I don't for like a month, and people start like berating me on the timeline, like, bro, you said you were going to sell literally a month ago, and then eventually it reminds me enough to actually do it.
Your version of the timeline is my wife.
also my other half. Yeah, I have targets that she is aware of, so that if something hits it, she tells me, then I have to do it because
she's the only reason I've ever made any money in this space.
We need that wisdom.
If
You
it
need
weren't
that
for him, I
wisdom.
would have round tripped 100% of everything I've ever purchased. So
Yeah, sounds familiar. Let's just get you up to speed with a few other things. Then want to go around the table here, see what's catching everyone's attention. A bunch of actually a lot of interesting news here. Again, quite a lot on the institutional and corporate side. Bo Hines, Trump's executive director on digital assets, shared that with regard to Bitcoin, they'd want as much as they can get. That was a quote from DAS, which is taking place in New York at the moment. Halliday raises $20 million from A16Z to fund an agentic workflow protocol. They're aiming to speed up the development of decentralized finance applications and avoid the need for programmers to write the smart contracts themselves. Radium responded to Pump Fund's announcement of their own AMM by announcing their own version of Pump Fund to launch tokens. Interchain Foundation to create announced they will be creating Cosmos EVM by open sourcing the EVM OS. Crossmint announced $24 million raised to build crypto developer platform for tech firms, and some more stuff. South Korean central bank to start a CBDC pilot. That's pretty interesting. 21 shares Polkadot ETF plan is progressing. So, more and more tokens are getting sliced up and put into ETFs or being applied for. And then finally, a blast from the past. NBA Top Shot announces NBA moments can be traded openly on OpenSea. I think that was something people were calling for a long time back in 2021 when that first boom of NFTs and NBA moments were traded super aggressively. That's one of the first reasons I think a lot of people got into NFTs pre the kind of profile picture mania and phase. So that is interesting to note. But that's the roundup to get everyone up to speed. Before we get into the main headlines today, just want to go around, maybe start with Ledge, then Adam, and then Brad. Like, what's anything catching your attention here from the roundup? Anything else going on? Legendary.
Yeah, there's two things. NBA Top Shot, like I haven't looked in years. Closed beta was one of the first things that I collected in terms of the NFTs, and I probably should log in and see what's still there if there's any value to that. But that was the lucky part about that was that I learned this lesson very early in terms of round tripping with NBA Top Shot. Because in the closed beta, I put in like a maximum of a couple $100, and that went up to a solid 6-figure portfolio. And I was like, yeah, we're going to wait until that goes to $250,000 and then we're going to sell, which obviously never happened. So at least it was, 2020, I think, before the bull run had even started. So that was a very, or 2021 then, a very early and good lesson to learn. In terms of some more serious commentary, the Halliday 20 mil raise to fund that agentic workflow protocol, that's an interesting one to me, because we've seen that with all of that vibe coding that is going on. And someone had this viral post yesterday or a couple of days ago saying, oh, they built this SaaS application using Cursor only, and it's so good. And then people started to troll him and like basically, bypass his subscription, find the API keys, hit them up until they did reach the rate limit. And he was like, oh my God, X is so mean. I'm never going to share anything again. And, that's all fun and games. But if you go into DeFi and if you go into smart contracts, which, not all of them are upgradable, and you actually have money in those protocols, which then can be exploited. And that happens all the time, obviously, also with human written code. And Cursor is not really aware of those best practices. It was like another case of someone who was like vibe coding along and, was vibe coding for months and then never had a backup of that and put that into Cursor and just told it to do some like minor UI changes. And it did mess up with the entire code. And that person did not have any kind of backup, which he was like, trying to build over the last couple of months. So that's obviously something to solve for. And right now there's a couple of services that basically offer that, give me your vibe coded mess and I'm going to fix that for you professionally. But there will be a point, obviously, and this point will be, I think we'll get there pretty fast when those Bolt.new, Cursor, all those apps will be able to kind of use those best practices as well. And that's a bit more challenging, obviously, for the Solidity side of things, but we will get there. So it's good to see money flowing into those ventures or trying to solve for that.
Yeah, that's actually like everyone's joking about it now. Like, oh, what an idiot! Like, you didn't do the things, and like, of course, you're never going to replace humans. Humans can, you can see how we can hack your system and fuck you up. Like, it's coming, guys. Like, it's unfortunate now, and it's a kind of a game now. Everything looks like a toy in the early days, which it kind of does, right? You need a lot of experience, but man, like as fast as we've seen this stuff iterate, like if you remember when GPT-1 came out, what was it, 2 years ago at this point? Man, which actually feels a lot longer than now that I say it out loud.
Yeah.
But man, like to go from just like I can query this thing and it can give me some like decent Google results to it's literally rewriting my entire code base and deploying an app that I literally couldn't have done before, on top of all the image generation, on top of the video edits, on top of the deep fake stuff. Like, yeah, man, it's accelerating in all dimensions.
I've been vibe coding for the past couple weeks and been having a ton of fun with it. I would never try to do anything serious with it, like
Same.
DeFi or anything, because I know I definitely put my API keys in there. There's definitely some terrible security practice that Cursor is using. And so I've made a couple websites that I've been sharing around with friends, and I've just been blown away by what's possible. Just absolutely incredible. And I worked on a ChatGPT product ChatGPT 2 product at my prior company for a hackathon. And we like automated all of our customer support with it. And that was before, like in like a closed beta. This was like before, you know, anything. I can't even imagine what I would be able to do now with it.
Yeah, it's honestly I'm using it for internal stuff, right? Like, you know, Mega testnet just launched. So like I'm writing scripts so I can like, hey, distribute ETH to these 150 wallets. Hey, like write some performance tests so that I can do this. And if you can Claude, you can actually even upload documents. So like I'm literally uploading all of our internal technical documents. So like anytime I want to write a script, I can make it hyper specific to our deployment and it has that context. It can write some code and it's just like, boom, easy.
Just one more thought on that, like also on how we evolved to like trust AIs to do everything for us. Yesterday we had this release or re-release, depending on how you want to frame it, of the JFK files, and everyone was like, "Bro, I'm not going to read 80,000 pages of documents. Who's the first MFer to upload all of that to Perplexity, ChatGPT, DeepSeek, and just give me the key findings?" Everyone's like waiting for AI to do the job because everyone's like, "I'm not going to read that by myself."
Yeah, it's
This site
so
is amazing, Fern.
I'm going to share this. So, I mean, Adam, when we spoke the other day, you showed me like a different thing that you'd coded. Now we've got something else here. What are you working with? Let's get this up. And
I've been obsessive. I'm like an obsessive data collector of my own data, and there's finally use for it. I can train like all these things. Like people ask me for recommendations all the time, and so I made this website that is trained on all of my personal data for the best pizza places in New York, so people stop asking me. And I just like send this website to them and click on my face, and it'll show you. This is not going to work for you because you live extremely far away from New York, but I'm curious what will happen. So it gives you the nearest pizza place to your current location on foot. Oh yeah, you have to give it your location access.
okay, right, and it's got to be on your phone as well. Did you say?
No, it could be anywhere, but like you don't live in New York, so it will show you how far it is on foot from wherever you are. It'll be interesting, but you have to give it location, then it'll do the triangulation. But yeah, I made this. I've been like improving it. You know, it's been a really fun project, and I've been giving it to all my friends, and they love it. So the other one I made was like the movie website, like my movie recommendation website.
Yeah, that's the one you were showing me before. So you're churning out one of these sites like one per week.
I've just been obsessively collecting my own preferences for a long time, and like in spreadsheets, and like I'm like a hoarder of digital information about myself, but not like health stuff. I don't have any, just like my things that I like taste and food, and I just like, oh, I can like train AIs on my taste, and then I can share this with my friends, and I can like decentralize myself, so to speak.
So the
love it.
The real question is now, I did input my location. For me, it's a 81,000 minute walk. That's a bit more than 50 days. Umberto, is it worth the walk?
King Umberto's is amazing. I would highly recommend you get on, you get on foot and you get over there.
One final point on this before we get into the main headlines. One of the pretty serious reasons why we think it's so important to go daily when it comes to content is when you said you want to try to decentralize yourself. Obviously, you've got all of this information that you've been building up for a long time. But I genuinely believe at some point in time, pretty soon, we'll be able to train the AI like on our content style, our data, because we go every single day. It'll have a huge amount of information on us. And there should be like digital versions of us at some point in time who can analyze what we do and then deliver what we do in a different way. I don't think it's going to replace us. Like it will take a long time to be able to do that, but it will just be like this cool offshoot that maybe you know, if we need a video spun up with Bread to do one of his technical breakdowns, we've got enough data on him. We just need to feed in the content, and then that can be done, you know.
Reed Hastings has done a really, Reed Hoffman has done a really interesting thing on this. You can Google, he like basically built an avatar on himself, trained on all of his books, all of his blog posts, his writing, and then he interviews himself, like a digital avatar version of himself, where the avatar is answering questions as if he would have answered them. And I saw this about a year ago, and so I can't even imagine how much farther it's progressed since then. I've experimented this myself because I've written, like I keep a blog for my personal travel that I've kept since 2011. And I trained it on my writing style. I tried, does not work yet. It cannot mimic at least my voice yet. Maybe I'm not using the right prompts, but it hasn't like figured out creative writing to the degree that I needed to be able to like, I'm like, write a tweet for me. And then it writes a tweet. And it's like, that's not my voice at all. Like I can't do that.
Adds a bunch of emojis. That's every time I reference a tweet, it's like a bunch of emojis and like finger points and
rocket emoji.
Yeah. You go to jail, straight to jail. Rocket emoji, bag of money.
Yeah, its sensitivity for writing isn't there yet. It's like very rudimentary, very basic and obvious attempts to write creatively, I think.
Did you try that with ChatGPT 4.5 though?
I haven't tried the latest.
I'll try it out as well.
4.5, like massive difference is actually that human natural writing, and that should be pretty good at emulating your writing style.
Interesting. I mean,
this is now an AI podcast.
It is. One of the things I was just wondering was, it's interesting that though both of those funding rounds that were AI related in the news still have this crypto element. Like it's done by A16Z, but the crypto specific arm, the other one is funded by kind of crypto specific funds too. So it's like this crossover is certainly not going away, I don't think. And we'll continue to monitor it as we find it interesting. But let's for now get into the main headlines. I think, Ledge, you've got some pretty interesting stuff. We've got three good ones today. Ledge, take it away with Saylor. What's the breakdown? What do we need to know? Is Saylor gonna send Bitcoin? Is he like a strategic problem now?
Yeah, Saylor is back with a new strategy to buy more Bitcoin. This time, 500 mil, the purchase target. It's again a preferred stock issuance. We had that a week ago. It was Stark. Now we have Strive. There's a couple of differences going on. So just to break that down, what is happening is Strategy wants to issue 5 million shares. Again, Series A perpetual preferred stock, just like the Stark issuance that we've seen a week ago to purchase up to $21 billion in BTC with that. This time, however, we have a 10% fixed annual cash dividend. Last time we had 8%. And there's also the addition that if the dividend is unpaid, the interest will compound at an additional 1%. It says per year. That's not true. It's compounding per year, but quarterly. That makes a difference in the compounding speed, basically. And that goes up until a maximum of 18%. So just putting those two things next to one another. Stark, again, earlier issuance, 8% annual dividend. It was the previous preferred stock offering, and it was at a way bigger size because they allowed themselves to go up to 21 bill. This one is only, quote unquote, only 500 mil, but it comes at a higher yield, at a 10% yield instead of the 8%. And if the dividend is unpaid, that goes up until up to a maximum of 18%. And the first dividend payment is scheduled to start pretty soon, scheduled for June 30th, 2025. It's kind of interesting to see that happen to some extent, concerning to another extent. The interesting thing is obviously like how far he's pushing this game of finding new ways to issue preferred stock, new ways to raise money to buy BTC. It gets a bit more concerning or difficult to kind of then understand what happens actually, say in a case of liquidation, because this is all preferred stock that does not have voting rights, but it is more senior in terms of the debt structure. But then also you have questions like, what is more senior? Is it Stripe? Is it Stark? They are both like issued as preferred Series A stock. So in theory, they should be both Pasiparo. They should both have the equal priority when it comes to a potential liquidation. That is on the one side of things. On the other side of things, the stock market once again did not like that that announcement. Just like the last time, the stock moved down a couple of percent. It is now down another 4% and at $283. And there's definitely like those growing concerns if he's pushing that game too far, that this could be a massive liquidation event at some point. But again, in this case, it's a different kind of issuance that is not comparable to the basically zero coupon bonds that it was issuing previously to the preferred stocks.
Got it. So what I'm taking away from that is there is more, they're trying to raise more. As they raise more and the price of Bitcoin has gone lower, the terms at which they're raising continue to get worse. And because the price is not going up sooner, the market is not responding well to this continued strategy. Just an additional thing for people to note, which I think didn't necessarily put that much confidence either out there, was they did continue to just buy Bitcoin spot the other day. So I think this was last week, they made an additional Bitcoin purchase, but they were hardly needle moving. So it's just 130 Bitcoin for just 10.7 million. But compared to the size and velocity with which they were buying at 100K, obviously that's like, okay, well, you're supposed to buy more when it's lower, not buy loads when it's high. But I guess this is a function of the market too, where people are willing to throw money at something when the price is getting really high and people are getting super excited. And now people are kind of drawing back, even though you're supposed to do the opposite as an investor.
It's them Veblen goods for you.
Yeah, that's kind of part of the strategy, right? You have this like organic price move up. That also Pio has made a good point on that. And the strategy is not like to buy Bitcoin as cheap as you can, but like to buy into this momentum and just help to move it up further instead of like accumulating now when the price is a bit lower. And then you also see the market, like always this meme comes to mind. You have this line of people, BTC at 120K, everyone's lining up to buy, BTC at 80K, nobody's lining up to buy. And that same probably also holds true for the market because
that image is perfect.
And he's increasing the yield. He's going for 10% dividend instead of 8% to get people to actually give money to him to buy. But if BTC were like pumping at 120K, you probably could get the 0% offerings again to purchase even more.
Yeah, definitely. Adam, any thoughts here from your side on, we've never heard your takes on the maybe the more general majors stuff. How are you seeing it at the moment, the kind of general setup for crypto more broadly?
I think with any risk asset, we just need other people to feel bullish, and then it just flows down to us. And so I'm just waiting on like TradFi traditional to not be so scared about what's going on. I mean, it's just uncertainty, right? Everything is a function of uncertainty, and we have no idea what's going to happen. Like ETH just broke 2K, and that's exciting. And I'm expecting that at some point in the next 10 minutes, we'll get a tweet about tariffs. I saw an amazing meme yesterday. I was like, nice pump. It'd be like a shame if somebody were to tweet about tariffs. And I saw that and just started laughing so hard.
Yeah, basically everything on the way down was like
comments. This is sorry, go on, Brad.
No, just like the whole way ETH has been like had any kind of move positively, like, and if it was like the only thing that was green in the market, everyone's like, the only thing that this can mean based on historical results over the last 2 years is that like doom is pending, like an imminent danger is here because this one asset is pumping and has never pumped and then not been immediately cucked.
Yeah,
Listen,
it's
just hold out hope for us. Hold out hope for us. I'm unfortunately one of those sad ETH holders you've heard about on the timeline.
You're not the only one, Adam. We've spoken about it continuously on the show. I think there's a whole mini generation. Well, I think there's two generations. One, the people who became super wealthy pre-2021, or a few generations there, right? People who either bought in, then there was DeFi season, and then there's NFTs as well. And like there's all this loyalty that has been built up with ETH because of all the people that made money with it. And to be fair, it's not just the financial aspect. I think there are a lot of people for whom the message and ethos of ETH is something which they really, really resonate with. And as we've said, like sometimes the value accrual might not necessarily make sense at certain times.
I joined Proof of Play because we were ETH aligned. I mean, we remain very ETH aligned. The team is, about as ETH aligned as you can be. And so, yeah, the value accrual definitely doesn't seem to be there. And it's unfortunate because I do think, they've built like an amazing system, and it just doesn't seem to be, it doesn't seem to be translating to price action.
I don't know if you caught the news we talked about yesterday. It's pretty big news. The Converge, the chain which Athena and Securitize are building, which is doing away with ETH as part of it. And this is maybe feeding into the next headline, which Bread's going to take over on, because it might be a view into the way things are going, rather than things being permissionless, rather than being completely decentralized. With Converge, what they're doing is, ENA is the staking token to secure the network, and USDE and USDTB, their two stable coins, are going to be used for gas. So no need for ETH in that specific ecosystem. And then maybe flowing into this, Bread, I don't know if you want to come back on that. It sounds like you might, you're going to go into these verified pools, which Coinbase are launching with Uniswap. So take in whichever way you want. Take us into the next headline, comment on the previous thing. Let's go to you.
Yeah. So first I'm going to ask you a question. Converge, is that going to be an L1, or is that going to be within the Ethereum bubble? I didn't actually catch up on the news. Are we aware of the construction? If not, I can answer both. So like if it's an L1, like, yeah, that's just like any other alt L1 that comes around, like Monad's launching. Monad has nothing to do with ETH, even though they say ETH aligned because they're EVM. Like, so like the blur of like what is scaling and what is not scaling, what is alignment is like really fucked up these days, to be frank. For me, it's just like basically using ETH at least as gas, and then like at least touching Ethereum, the chain, right, in some capacity, right? So like you have Polygon, which is a side chain, doesn't really use ETH as much as like say Base, which is a roll up, which is the same as Arbitrum. We're going to be in the middle of that stuff. Mega will be because we're of Lydium, but so like this has always been like the bear case against the modular roadmap, is that the further away you get from Ethereum mainnet, the less fidelity that you have of the actual asset that is Ethereum, right? Utilization, you begin to inject all of these, we'll say, you begin to inject a bunch of incentives that make people want to do things that are not necessarily strictly to value accrual to ETH, right? Because you inject a bunch of different tokens, network tokens, right? Optimism has OP. OP is then charging all of their chains in the super chain, and that comes back in the way of buybacks of OP. And then like the only actual value going to Ethereum is like a little bit of, awareness depending on the chain, because some chains abstract it entirely, and then a little bit of dollars in the form of fees back to mainnet. So this has always been like the bear case of like doing separate networks and continuing to grow out in this tree-like structure from Ethereum mainnet, is that just the further away you get from mainnet, the less Ethereum there actually is. It gets more and more abstracted. USDC becomes the gas payment, all this shit, right? Anyways, so there's that. And then, so it's no surprise that the Securitize's chain is going to be doing that stuff, whether or not it's an L2. And then, so the second thing is going into what Coinbase recently just did. Again, this is going to be on Base, which is an L2. It's a roll up specifically, which means it's like it's the maximally aligned L2, as if you were to be in the nerd fights like me. And what they're doing is they're using Ethereum attestation service, and in partnership with Uniswap, V4 specifically, which has hooks. Hooks allows you to do some programmable stuff in DeFi in their pools. And they basically make it so that on Base, you have some pools that you can only access if you have been proven to KYC through Coinbase. Coinbase is attesting that your specific account has actually said, hey, this person is an accredited investor or whatever, and it allows you to operate on the pool, right? And then by utilizing Uni V4. Now, Brian Armstrong talked about this and said like this is something that is necessary for certain assets, right? Like straight up, like regulations coming. And in a regulated environment, you need to be able to pass certain checks. This passes those checks. So in that light, it is seen as like a pie expansion maneuver, right? It's not meant to say that like everything needs to be permissioned, everything needs to be identified, whatever, although a lot of people interpret it that way. And there were some people that actually pushed back saying, "What the hell, bro? You did this with Uni instead of your native Dex Aerodrome, right?" And actually, if you go to Good Alexander's, yeah, won't this fuck with Aerodrome? It's a good question. So that was from Justifano. So the reason people are saying this because Aerodrome has basically been dominating on base as the Dex, right? It's crushing volume. It's been a loud proponent, and Good Alexander actually mentioned that Coinbase came to them, I want to say it was like half a year ago, and said, "Hey, we want to do this with you," but they declined because they said, like, "Look, bro, like you're like think about the total TAM you're going to have in a permissioned pool relative to permissionless pools, right? All these permission pools, because it is a subset, right? It is a smaller amount of assets, at least right now in this immediate future. It's like these pools are then going to have to compete with permissionless pools, which potentially have deeper liquidity, higher yield, whatever, all these things, right? So everything in this permission subset is going to continue to be drawn towards the permissionless counterpart. And in that world, like, why would a business devote any energy to this new nascent thing when everyone is basically going to be pulling towards the thing that is permissionless, open, whatever, that they're already dominating at? So he's like, they just said, show us that it's a thing that's worth actually building for. We can do the same thing, the verified aspect of it. It's just not worth our time. So once it actually has that element, we will devote energy to it. But until then, right, permissionless is king.
Very interesting. I wasn't aware of that second part. So basically, the position currently is, look, we can do more centralized, permissioned if you guys can prove that it is something which is sufficiently profitable. Meaning, not just that it is profitable, but it has to be sufficiently more profitable than what we're already running, because we're probably banking on a lot of that capital staying in the permissionless pools. I think at least as it comes to crypto capital, I'd be curious, Legendary, what you think on this as well. Like, there's obviously a significant amount of hesitancy around the space when it comes to permissioned stuff. There's like it seems almost borderline unfair sometimes, but it does seem antithetical to the space sometimes, where people really, really want things to be kind of free flowing. They don't want a KYC for things. They don't trust people with their data. And even, for example, if you think of Trump's recent raise where you needed to, for World Libertyfi, I bet that would have filled up way, way faster if there weren't all of those obligations involved. And they really, really struggled. The raise did not happen. And look, maybe that was a little bit of a commentary on Trump himself. I don't know 100%. I would have thought, at least at that period of time, people would have been bullish on him because he was saying all the right things for the crypto industry. But there's clearly the hurdle to get into a permission pool, or to lure capital that is in permissionless ecosystem across, I think is really, really high. You're going to have to be offering something exceptional. And if anything, I think maybe the more permission stuff will be lower, as you just said. So that's my headline thoughts. Sledge, do you have a thought there? And Adam, maybe after, if you've got something on this.
I do. I have quite a few. Kind of also in line with what we spoke about yesterday on the show with Securitize and just being able to address a new market. And if you have both the permissionless and the permission stuff, that's totally fine. Then look at something like the Coinbase stock, which you now can trade on chain, which is basically, it's not really the Coinbase stock. You're trading a company who bought Coinbase stock and had tokenized that, and you own a token that represents that company's ownership in Coinbase stock. And it doesn't even answer stuff like dividend payments, which is not relevant in Coinbase's case, but in others. So I'd much rather have a more direct ownership of the stock, and I, have to KYC for some of the things. And if stuff is good, people, always have the choice: do you want to participate in that or not? And you have companies, I mentioned it yesterday on the show, Mega ETH with the Fluffles Mint. They checked for OFAC sanctioned wallets, etc., made sure that this is all compliant and working. And if you want to grow this space, you have to be compliant from a regulatory standpoint. And now I also see the other side of saying, yeah, but like, where is this leading to? Because then you could have, maybe jurisdictions like the EU saying, oh, okay, if you use permissionless pools, we're just not going to allow you to offboard cryptocurrencies. But equally, they could also say, we're not allowing you to use cryptocurrency exchanges at all, or have the travel rule, which is now imposed, which basically means that if I send from a centralized exchange more than 1K to Brad, I need Brad's passport and I need to KYC him. I still can send it to my own wallet and send Brad 5K or 10K or whatever. But like those rules already exist, and there's like ways to work with them. There's ways to work not around them because it sounds legal, but just to not, be in that position to have to abide by that rule, to put it maybe in this way. So I do see this market for that, and this is where the space is growing. We've seen that with the growth in stable coins. And then even if you say like you don't want to have any of this TradFi permissioned infrastructure coming to this space, you can't really stop it. And the best example of that is exactly the previous headline that we had. Michael Saylor is just here doing his thing and has scooped up 2.6% of the total Bitcoin supply, whether you like it or hate it. He's just doing that. And that is the most decentralized currency, and nobody's stopping him. Nobody can stop him from doing that because he can also interact with that protocol. So I feel like this, initial dream of how we envisioned crypto is beautiful. And I like a lot of the thesis and the line of thoughts that went into it, but it's just not completely feasible to keep that up and alive if we have this interest flowing in. And you could do all those things like the original Bitcoin pioneers probably would not like the idea of someone like Michael Saylor coming along and buying 2.6% of the supply via a publicly traded company and on the Nasdaq. So I actually think it's a pretty cool thing, to sum it up, that this is an option. I would hate it if you are forced to only use that and can't use permissions anymore, but that's definitely not the case. In terms of incentives, final thought on that, would be then cool if you have like some TradFi players coming in and say, yo, use my permission pool, and I'm going to give you 2% extra yield. Basically, we've seen PayPal USD doing the same. Use my stable coin and I'm going to pay you extra yield on Camino. You could see the same here. And then, the incentives, if they're attractive enough, people will use that.
I like it. The key thing that you said, and actually this is a product question I've come up with, and Adam would be very curious to hear your thought on this. The key thing you said is about having options. And I think people think a lot in terms of, or like, is it going to be this or is it going to be that? When in reality, all of everything basically is just a whole series of ands. Like, yes, we're going to have these decentralized options, and we're going to have these permissioned options, and maybe there'll be some hybrid options in the future. I don't know 100%. But Adam, from a product perspective, obviously you've led your leading product at Proof of Play. You're kind of chief super growth officer, all kinds of startups beforehand. Like when you're faced with this kind of question, what do you do when there's like this new incumbent who are like coming with a lot of money and traditional kind of clout? What's the kind of thinking here?
I think you have to meet the user where they are. And there's, we're surrounded by completely different groups of people, right? There's some people who are like NFT traders, some people who are DeFi heads, some people who just like to short, some people who want to do KYC, some people who will never consider KYC. I don't think there's a silver bullet product, and trying to build something that works for everyone is a really losing strategy. So you just need to find your lane. And as long as your lane isn't tiny and useless, like you can find a market there. Like you don't want to pick a market where there's like 10 people, of course, but you need to just find the product you're building, be really opinionated about it, and go forward with it. And then like, if it doesn't work, you have to pivot, but be like, oh, I want to serve the privacy guy, and I want to serve the person who is like, throwing their social security card out like in public, and like everyone in between. Like Hyperliquid is a product that exists because there's a lot of people who love the idea of no KYC DEXs. Whether or not it's legal, I don't know. But, like that is serving a need for that group of people. Like personally, I don't mind KYCing. My data has been stolen and sold and exists on the dark web probably, 30 times by now. Like I've just like kind of given in. I'm doing my best to just be, careful with links and, keep my own security up. But like all of our data has been stolen so many times at this point. Like saying you're privacy concerned, unless you've been like this since day zero, like you're using a Proton mail and you use a different Proton mail for everything. Like, yeah, there are people like that. But a lot of people just kind of like LARP is like, I'm a privacy advocate. It's like, that's great for you. And we can build a product for you if you want, but I'm not going to try to, like, I would never try to build something for everyone. I think the biggest problem that bad product people, they fall into is they think they can serve everyone. And that's how you really serve nobody effectively.
Yeah, that's such a good point. And when I was working in fintech, my then CEO founder illustrated that beautifully, right? You say you have a group of users on the left side, you have a group of users on the right side, Nobody's in the middle, but if you average those needs, you build for the non-existing group in the middle and you serve exactly nobody.
Yeah.
Yeah.
If you think about like Blur in the early days, their product was perfectly optimized for NFT traders, right? It like they turned everything into a line item. It was just perfect product positioning. They knew who their customer was. They're like, they knew these people are ruthless traders. They care about making money. Screw the projects, like royalties. Who needs those? Like, we're just here to profit. And they built the best product for that user. OpenSea got destroyed because their product, like wasn't serving the current market. Like the NFTs went from like, ooh, these are fun, we're part of a community, these look nice, like let's support artists, to everyone's like, oh wow, we can make a lot of money here. Like there's like serious money to be made here, and they optimize for that cohort of users.
Yeah, I think that's right. Interesting. Yeah, I definitely wanted to hear your thoughts on the product side there. But we'll see how things go. I mean, clearly the market is going to be big for both, and you've got big people, big building for both. So we'll continue to report on that as we see necessary moving forward. Let's get into our final headline for today. This is a fun and interesting one, actually. So this is the news that Yeet, the crypto casino created by notable crypto members Keyboard Monkey and Mando, and professional poker player Ben Lam, has raised $7.75 million in funding round led by Dragonfly Capital. This is pretty interesting to me because it's the first time that I've seen a casino, like a crypto casino, backed by one of the tier 1 VC firms. This is from Decrypt, giving some context, that the gambling platform will offer a variety of traditional casino games like blackjack and roulette, alongside new crypto-focused games. For example, users will be able to engage with casino games that replicate the experience of minting NFTs, trading meme coins, and getting rugged in DeFi. So something pretty unique to our industry. They go on to say that to start, Yeet will focus on providing entertaining, high-stakes gambling experiences instead of on-chain games, though it may look to incorporate provably fair games via on-chain verifiable randomness in the future. That was interesting as well. They're going up against some pretty big hitters here. They've got people like Stake, Shuffle, and Rollbit that are already in this industry dominating, but they consider themselves to be distinct from them. They said Yeet stands out by being deeply crypto native. Yeet is not trying to compete with those platforms. We're offering something they don't, because of this kind of crypto native specific branding and specific focus. So Legendary, it's only right to come to you here first. The last part of my notes, the last part of my notes here says it will lead to an airdrop. They've been public about that. Thoughts on the entrance into the gambling industry? I know you messed around on Shuffle, I think specifically, and YOLO games, one on Blast, we were kind of all playing around on as well. What's your thought on this, their entry into this sector?
Multiple thoughts on that. I tried to keep it quick. Gambling, super competitive market. A lot of the gambling is currently moving online. A lot of the incumbent players are facing massive issues right now from a regulatory standpoint, including Stake, which is Stake in the UK as a product of, it was either Bonnie Blue or Lily Phillips, one of those super prominent OnlyFans creators now wearing a Stake shirt that was basically judged as them promoting Stake, which was not really the case, but that got into a sort of regulatory and legal issues with that. Gambling volume in basically stationary venues like Vegas is actually trending down. More things are happening online. And a lot of the times you have the quote unquote original games, right? This is the roulette, your poker, your limbo, crash, and all those like variants of that, but they are pretty much the same. And nobody's really like innovating with new games. There's a couple people trying to do that, a couple prominent people working some casino products like that. But most of them are like just copy paste the same thing in a reskinned version. You can, make the argument YOLO was a bit different to that, having like this PvP gaming basically, as well as the Moon or Doom, which was also a bit different because it had this PvP element. So I do see this idea of executing on different originals that could really work and could give people something to gamble and look forward to. But to me, it has to have the social element of sorts, because even the whole meme coin season is a PvP as well, right? Multiple people can be involved in the same thing. There's winners, there's losers. That works on Stake to a certain extent with Crash, where you can play around together with other people. Rollbit has the bonus battles where you can buy a bonus game in slots and like see who gets the best result out of up to I think 20 people, and that person is taking away everything, but it's like still basically not really innovating something new. So if they do this in a cool way, I can see this working. From a personal perspective, seeing that, you know, it's a company I would have loved to invest in, to be perfectly honest. Didn't have a chance to do that, unfortunately. But if there's an airdrop and if it makes sense looking at the house edges, I'm definitely gonna, you know, put a very, very, very significant volume into that, because it's done pretty well for me on Shuffle. It's done pretty well for me on YOLO with Blast as well. So that's definitely something I'm gonna keep track of.
BJ, I don't know if you did this intentionally or not to like perfectly tee me up, but I don't know if you saw the line in there about VRF.
I saw it. I didn't know how it could be there like that in the article itself.
Yeah, like who could have seen that? Like, so we're actually trying to get in touch with Yeet. I'm reaching out to a bunch of their investors who I know.
Nice.
This is kind of like a perfect use case for what we're offering right now, like fully on-chain randomness, especially with casino, when there's real money on the line. So
yeah, people want to be confident, right?
I'm at GDC right now, and I met with you know, a prominent founder who is launching a game imminently on Abstract. And I asked him, I was like, why aren't you using our stuff? He says, well, I probably will, but I'm waiting to hear from a couple of whales. Like, if you like, I will put $1 million through your game if you can prove to me that it's fair. And so I was like, bingo, right? That's exactly why like our product exists. Like, people who are going to put size through a product, they want to know that they're not getting rugged, that they're not, you know, going to get screwed over somehow. And so in chatting with a bunch of teams last night, I think you're going to start seeing more and more of this. Like, my goal and intention for this product line is that products that don't use fully on-chain randomness will get shamed. It's like, how do I know you're not taking advantage of me? It's like, I want to see what's behind the scenes,
especially when that option is available to people. Correct. I guess
it's like, we have this option. Like, you can do better, right? You can do better for your users. You can be more transparent. And so like, I want it to be not like, oh, we have this cool thing that it's like, no, this is the norm and the standard. And if you don't do it, you are out of line with the expectations of the user. So we have to figure out like, how do we, because there are examples like MapleStory got fined $9 million because they were screwing with rent. Like, this is the thing that is happening today. It's not like we're making up a boogeyman, like, you need this. Like, no, this is a real problem. And that's what we're trying to solve with our on-chain VRF. So like, casinos are an amazing use case.
Makes perfect sense.
So interesting. It's the same thing with gaming though, right? Like, it's like this whole, like, just gaming broadly, where it's like the hope is with adding a Web3 component that you add a competitive element to your, like, your product is just better. And when it becomes just better and the expectation shifts then to the user of saying, I want the just better thing, everyone has to converge on the better thing to just normalize it across the board.
I want to see a badge, you know, verified by proof of play, or like, you know, provably fair, you know.
What
like
a great name for that, by the way. Like proof of play as like a back end like component.
Yeah. Like, I want to see a badge on every website, and if you don't see the badge, like, I'm not using this. Like, I don't trust you. Like, that's my plan and my vision for what we're building right now.
Make it happen, man. Sounds good, especially for this casino thing. It sounds
when money's on the line, you have to.
Yeah. And you know, people have spoken about like the different kind of markets and cycles that we're in. If we are in some type of period of a downturn, or where things are not going to be as strong as before, casinos do great. Casinos are still doing great, so people will be spending time and attention in that direction. So very interesting stuff. Guys, that is the show for today. Hope you found it as enjoyable as always. We do this every single day, Monday to Friday, 7 a.m. Eastern time, for 1 hour. We're live on X Video, YouTube, Apple, and Spotify too. Thank you so much to my co-hosts today, Legendary, Bread, and Adam. Have a wonderful day. Take care. We will see you again tomorrow. Bye-bye.